Hi, Woody here for this week's Insider. Now, today I'm joined by my fellow editor, Greg Canavan, and our trading professional, Murray Dawes, who is the editor of the excellent VIP trading advisory Pivot Trader. Welcome, guys.
G'day. Hey, Woods. G'day, Greg.
Woody.
Now, cool. We had a great editorial meeting at the start of the week. I think that was on a Tuesday, and it really became obvious that we're going through a really fascinating and tricky time right now. So I thought it'd be really good to get Greg and Murray in on a conversation to discuss the state of the markets and potentially if we're seeing any turning points, because there's a lot going on. The way I described it in an email to these guys earlier was that unemployment is up, company earnings are down, government debt is up, interest rates are down, central bank bond purchases are up, consumer spending is down. So there's a lot going on. The ASX is struggling. Murray tells me the small cap sector is flying, and then over in the US, we're seeing the FANG stocks, the stocks that make the big stocks that make up the Nasdaq, are up to their all-time highs again. So, Murray, you're our charting guy. How about you start off the conversation? What's going on in your view?
Look, I think it's quite interesting because I was actually chatting to a trader mate of mine this morning. He's a full-time trader, been trading the markets for 30, 40 years. And I tell you, he's just as confused as the rest of us. And he's actually adjusting the way he trades and has traded for years because of this market. He usually trades small cap stocks and goes very well there. He's backed off completely because he thinks they've run too hard and he's not willing to start playing in them at the moment. He's just trading around very short term in large cap stocks. And he's saying, look, I'm just as confused about whether this is going to have another leg higher or we're ready for the markets to get belted again. And he thinks they should, but he's wondering, scratching his head just like everyone else. And I'm in the same boat. I think at the moment I'm running things more from a market neutral perspective.
Yep.
Where my portfolio is long a bunch of stocks that I've been buying, picking up in the crash, and I've been focused on quality. So I've picked up things like a Newcrest in the middle of the crash around 22.80. That's up above $30 now. So there's a few things, there's great opportunities, but gee, you've got to be careful because we really don't know what's coming next. And so I'm sort of short the index and I'm long gold stocks and a few internet retail stocks and that sort of thing. But all up, the portfolio, whatever happens, if it does take off like blazes to the upside, which would amaze me, will survive. And if it does turn back down, will survive as well. So that my attitude at the moment is to tread quite carefully. I think I can show you my charts on where I think things are going to go quickly. I'll just
Well, how about we get to those in just a second, Muzz?
Yeah, sure.
First, I'll just bring in Greg, because one thing that we discussed today was that it is a stock picker's market right now. So what are you looking at, Greg? I know your whole modus operandi is that you don't know. You know that you don't know what's coming. Why don't you put in your two cents too?
Well, I guess the way I've been looking at things, and as I've been writing about in the Insider for the past couple of weeks, is really this is just a liquidity-fueled rally. So we've seen central banks all around the world, governments all around the world, put loads of money into their economies, loads of money into the financial markets, and that is just pushing up asset prices. So in Australia, I think we haven't seen the type of moves you've seen in the US markets purely because our market is overweight the banks. I think there's about a 30% weighting to the big banks in the Aussie market. So the main indices haven't moved as high as they have in the US, which is very tech dependent. But I think as a general comment, you can say that liquidity has lifted all boats back up again. And if you look at it purely from fundamental perspective, the US market, the one that I have been looking at, the S&P 500, we've now got a PE ratio of higher than what it was before all this COVID-19 stuff happened. So markets have been pushed back up on liquidity. And I guess the question is, and the question that everyone's asking is, how long does this rally keep going before you see the profit taking come in, before you start to see maybe a few tentative moves from central banks to start pulling back on a little bit of that liquidity? And something I wrote in the Insider, that in the past 10 weeks, the Federal Reserve has injected $2.7 trillion into the financial system. And that's not just money that inflates stock prices by 2.7 trillion. That is liquidity that moves through the market. And as quick as traders are moving and buying and selling, that constantly pushes up share prices. And as you said earlier, you're seeing these Facebooks and Netflix, these type of stocks that have done very well. Amazon, all-time highs. And that is just liquidity going into these sectors because there is liquidity there. They're going to go into these supposed safe stocks. Healthcare is another very popular sector now that money is flooding into because of obviously what we've seen in the past couple of months, and healthcare is now very, very popular again. So we'll get to some charts in a minute, I know, but I guess the question for me is, I'm certainly not shorting the market at this point. I think, you've got to respect the fact that there is liquidity pushing prices up, and we've seen, post 2008 with activist central banking, you can't really fight that until you see some proper signals of when you should start to take those positions. The market's rallying quite hard. I'm standing aside and waiting to see the signs of a decent pullback. But as I said, my basic premise is that we saw a bottom of the market in March. And I think we've seen the big reaction rally now. And at some point in the next couple of months, I think you're going to see the selling come back through again. And then that's going to create fear as to, are we going to see new lows? And then we'll get into those questions down the track. But at the moment, it's, how long will this rally go?
So Mars, well, why don't you bring up a chart now and show us what you're looking at so that we can see. I guess it's easy to see it in a picture, isn't it? So
Yep.
It would be really handy for our readers if we can maybe give them a bit of a takeaway to see what they should be looking out for.
Yep, I'll make it as simple as possible for people who may not have seen my videos. And I'll try to make it not have people scratching their heads. And look, this is a monthly chart. So every candle you see there is a month's trading. So there's a month's trading, there's a month's trading there. And you can see from these all-time highs, we have what I call the sell pivot on the monthly basis. So that black diamond there is programmed to find the sell pivots. And so that's basically when we get a monthly close below the low of that highest price candle. So, and my whole theory is based on markets constantly shake people out. And it's amazing that markets can confuse the bulls and the bears. And the way it does it is that you have large waves. And when you have this big crash that we've had going from the high all the way to the low, there's been a lot of people getting short on the way down, making money, feeling that they were going to make absolutely heaps. And what does the market do? It turns around and has a big short squeeze that goes nearly all the way back to the high, taking out all of those traders and getting people bullish again before it's ready to turn back down. So the way I look at markets is that I look at, for one, the sell pivot candle, which is this one here. And I don't want to make it confusing. There is just one key area that I look at, which is that 75 to 87% retracement of that sell pivot candle. And that's where I just so often see reversals. And what I'm really looking for is that as prices rally up into this selling pressure, I'm looking for a reversal back down. And that might be on a weekly sell pivot from here. And that's all I really need to wait for. And this is why I'm not keen on getting long the market in a massive way. I am watching this like a hawk, waiting for the area where I expect prices to turn down and at least have a move, back to the midpoint. I mean, this is what my strategy looks for, is saying, right, I reckon there's definitely going to be a good chance of a move at least back to that midpoint, and I'll have plenty of time to take some money and see what happens. But this is big picture stuff. It's pretty interesting to be looking at these massive waves. And if I just look at that whole wave and just focus on the one sell zone of that, this spot up here, if prices do get up there, I mean, that is just, for me, one of the best trades that I've seen in years and years, right? And this is why it's not quite there yet. And as Greg said, this rally can go on for another few weeks, another month, whatever. But according to my strategy, where waves so often retrace nearly all the way, getting everyone taken out, getting everyone bullish again in case of a down wave, and then turn back down. I mean, this is setting up beautifully. So really, like Greg said, I'm watching this, I'm waiting, and I think it can go higher, but if it gets up above 3,000 to 3,200, I'm going to be absolutely getting ready to put on some big short trades, basically.
Yeah, sorry, Muzz.
No, you go on.
No, I was going to say, what about you, Greg? What are your thoughts on that?
Yeah, I think like Murray said, markets do what you least expect nearly all the time. And when the market started bouncing and it had a pretty good rally, most people were like, okay, it's had a good rally, now it's going to sell off again. And there was all the talk about, are we going to retest the lows? Are we going to make new lows? And then you get to a situation where the rally keeps going, and then people are getting a little less confident of their calls about, the market testing the lows and maybe going on to even greater lows. And the market keeps getting a little bit stronger and a little bit higher, and then it brings more people into the line of thinking that, okay, well, maybe things aren't so bad, and maybe now it's time to buy. And it's at that point where the majority of the people decide to I guess, throw away their previously bearish views and start to become tentatively bullish again, that the market will then turn around and punish those people as well. So it is a really tricky situation in that you've got to almost be a disinterested bystander, just trying to watch the psychology of how all this plays out. And there's a really good comment or a good saying that markets make opinions, and we're seeing that happen right now. The market is making an opinion or forming a consensus opinion, and we're starting to see people shift from very, very, very bearish as they were in the last month or so to now becoming increasingly bullish. And you're seeing that, especially in US tech.
Mm. So what are the key metrics you're looking at? You said you had a chart to share with people.
Yeah, let's see if I can bring this one up. All right, the reason I really like the Aussie dollar versus the US dollar index, it's a really good barometer of global risk. When the Aussie dollar is under pressure, obviously that's global capital getting out of all risk markets, and it's a reflection of money going back into the US dollar. So you can see there it plummeted lower, it reached a low there on Thursday, the 19th of March, and it's been heading higher ever since. I guess the interesting thing about this is that it's continued to push higher over the past couple of months, and it's now starting to head up towards a reasonably important level around the, as you can see there, 67 cents. So I think if the Aussie dollar gets up around that level, I think you might start seeing a fair bit of resistance. And if you see it turn back down there, that might be one of the early indicators that the global risk appetite is starting to change. So that's one of the charts I'm really keeping an eye on in terms of the, when this rally might have run out of puff. So it looks like it could have a little bit more to it in the short term. But yeah, really interested to see whether that turns around. Don't know if you've got any thoughts on that, the way that you look at things, Muzz, but that's an
well, I love the Aussie dollar for that, and also the Aussie yen. I keep a pretty close eye on as far as watching the carry trade and that sort of thing. So it's a similar outlook on the using the currencies to give you an idea of capital flows and that sort of thing.
So that's what Greg looks at. The Aussie, he's looking at the Aussie to find that potential turning point. You're looking at that sell pivot in the S&P 500, which was the chart that you showed earlier. How do you relate that to the Aussie market, Muzz?
Yeah, look, obviously we go toe the line along with the US market. So I always analyze the US market initially and then follow on to look at ours, because so often we will track it. But we have really been underperforming, as we've been saying. So if we focus on the Aussie market up close, you can see, and I can show you quite quickly just to get a sense, that as far as the retracement from the lows goes, we're still below the midpoint. So there's your midpoint, 57.50. We're currently at 56.65. And this is, as Greg was saying, the banks being so weak. But if I was to, bring up the small ordinaries, just to make the point clear of what we were talking about. Here's the small ordinaries, and I'll just clean it up for you. If we look at the reaction, you can see that that's now well above that point of control and is rallying quite strongly. So the small cap stocks that have been underperforming for years, in this current rally, I mean, they've been absolutely bashed, but I'd say it's a lot of that's retail punters are really in there. And you'll see the numbers on Robinhood, which is a big retail punter outfit in the US, their volumes have gone through the roof. And you'll know that ASIC have come out recently and said to warn the retail punters, because they've been flying back into the ComSec accounts, and the activity levels from the retail guys has been going through the roof. I think from people thinking that this is the big opportunity to get in. And the major part of my strategy is to, as I've said, wait for these huge sell-offs, but then wait for the squeeze. Once it goes too far, it's going to meet the selling pressure. This is where the selling pressure is, as far as I'm concerned, a 75 to 87% retracement. That's where the really big selling pressure will be, and we may not get there. But from the small cap perspective, the higher this goes now, the riskier it is. If I look at the potential downside, and even if it is to revisit those lows and that's it, that's still a massive fall that can come. If you're buying here and there's massive resistance up here, I mean, what's your risk reward on starting to buy the market now in these small caps? I think it's starting to get a bit long in the tooth, as Greg was saying, and you're really taking your life in your own hands if you're chasing the market higher. And as I said about the trader friend of mine who has traded small caps for 30, 40 years, he's backed off completely from trading small caps and is now only focused on the large cap stocks. And if I look at the overall index, and I'll look at the XJO, and I look at the weekly, from my point of view, it is okay. It's rallying, and we've got a bit of a trend to the upside, but the downside pressure is so huge. And if you think about it, this is, I guess, just a simple way for people who aren't technical analysts. Everyone who's bought, let's go all the way back here to 2015, pretty much every buyer in the last 5 years is out of the money. If this market starts to turn back down from here, how many people do you think are going to start hitting the sell button going, oh no, we've missed it? So there is a huge amount of weight above the market. I guess that's the main point to make. And our market is a lot weaker than US markets. So, really, the higher this goes, the further it goes into selling pressure. So I'm just waiting for the signs of a sell pivot, which is, if it turns back down and has a weekly close, below the low of, let's say, this week's trading, which is the new high in the move, this market can turn down rapidly. So, for me, I'm quite excited by the way the US market looks, because the higher it goes now, the more excited I get, because it's actually getting up into the key sell zone area. That is the crux of my whole system. So this is like something that I only see once every 5-10 years, something like this. So I want it to keep rallying, but I think it's going to be an amazing opportunity to capture the next leg lower, which I think is going to come, and it's all going to hinge on the second wave of infection, which may be coming. And I think that is a real risk as economies open up, that could be a factor. And if that comes, I mean, that is really bad. So you think about the risks that are coming in the next few months. I mean, a second wave of infection hitting us now and then having to close down the economies again. Just imagine the absolute mayhem that would create. So I just think everything to me is looking like, it can keep rallying, yes, but I'm very wary the higher it goes now.
Hey, Muzz, just a question on the small ords index that you showed a little bit earlier. Devil's advocate, isn't it often a bullish sign when the small caps outperform? And therefore, I would look at, because I've been keeping a close eye on this as well, and I certainly agree in the short term, it's the snap bounce back has been so rapid that I'd be certainly wary of a decent correction coming through. But this is the sort of stuff that gives me a little bit of confidence that we've seen a solid low in March, given that the small caps are now outperforming for the first time. And I've got a chart on it I can show you guys in a bit as well, just on the relative performance to the. Actually, while we're doing that, I'll just bring it up.
Yeah, bring the chart up now.
So we've got it here. This is the XSO, and I'm just going to show this chart relative to the broader index, the broader ASX 200. And as you can see there, it's at its highest level of outperformance since late 2018. So to me, that's just an indication that there's genuine sort of recovery hopes coming back into the market. Often when there's a nervous market, capital will go into the large cap stocks. But in this instance, you've seen money coming back into the small cap sector. Now, there's an argument to say that the large caps in Australia are certainly dominated by the banks, and they've obviously had some major troubles by the economic shutdown, and could be a reason for this outperformance. But yeah, question for you, Muzz. What do you make of that outperformance of the small caps relative to the big stocks?
Well, yeah, look, I probably would agree with that in the fact that there is a lot of great companies out there doing some pretty interesting things. I mean, I'm definitely keeping an eye on quite a few and starting to pick up a few. Like, for instance, I bought an internet retail stock recently that is actually outperforming during this COVID time. So that shift in retail is starting to happen, and some of those tech stocks are actually seeing a big uptick in their sales. And they became quite cheap. Just in the crash, everyone sold everything. So there is some of those really quality stocks have bounced back really strong. If you look at your Pro Medicus and as you were saying, in healthcare, tech, etc. And Dubba is another one. And look, there's a whole heap that have really bounced back strong, saying that there were people waiting on the sidelines, ready to jump into these things. So there definitely is a whole bunch of stocks in the index that are like that, and I think are really good stocks. But I think just in the short term, it's just run a bit hard, and I think you will be able to pick those stocks up at cheaper levels. And I agree with Greg that maybe we don't revisit March lows even. Maybe all we do is a slight false break of those lows. But I just think we are going to see another wave down, and the higher this goes, it just, for me as a trader, I just look at the risk reward and I say, if the S&P does squeeze up into that sell zone, for me, my whole trade is, I don't think it's going to make a new all-time high before it has another wave down. So for me, the risk reward becomes very good to do a trade the higher it goes here, because I don't need to risk that much to find out if we're going to see a sell-off. And we've been squeezing really hard after the biggest, sharpest crash in history. So for my strategy, which is to look for those sell zones of major waves, I mean, I can't ignore that. So if I get the signals up in that area, it's just a good risk reward trade. Whether it's right or not doesn't matter to me. What matters is taking really good risk reward trades and trying to take profit quickly and then create that free option and then see what happens. I mean, that's all I can do. I don't know the future any more than anyone else.
Yep.
Hey, Greg, you got you're kind of getting together a kind of watch list of stocks. If you say that it looks like there's relatively bullish trend in, what levels are you looking at in order to sort of hit the button on those?
I guess there's not levels so much. It's just really trying to work out from a fundamental perspective, are you buying decent value? And I've had my eye on a few retailers, and even those, they've just rallied well beyond where I thought they could get in the short term, given that there are lots of earnings risks. And then when that sort of stuff happens, you try to rationalize, what you might have missed out on. And I think one thing that a lot of people have probably haven't sort of worked out is the government has come to the party so much in this economic disruption. I mean, we all know that the government is now supporting a huge amount of people that have lost their jobs. in many cases, a lot of people, especially in the casual workspace, people are getting paid more now to sit on the sidelines and wait for their job to return than what they were when they were working in a part-time fashion. So I think people probably underestimated the short-term hit to earnings that a lot of these companies would take, because it wasn't so much unemployment as underemployment while people were waiting for their jobs to come back. So for me now, the concern might be what happens with these companies' revenues and earnings when the government turns off the tap in September, and all that short-term support that they're offering the labour market finishes in September. So, for me, I'm not looking for levels so much as looking for when do I see a genuine turn in the trend. And at the moment, you've seen a big fall down, bounce back up, but the actual overall trend is still coming down for many of these stocks. So like Murray said, you're looking for risk reward, you're looking for high probability trades rather than just trying to follow short-term momentum. If you're a trader and you just want to see how far this goes up and you can keep a little stop loss while you're trading up, that's fine. But I'm trying to take positions in stocks that I think will do well for the next 1 or 2, 3, 4 years. And right now, I think the risk reward on those decisions is not in favor of the buyer, because I think you're going to see this bounce back up, but then you're going to see another leg down, not another new lows, but you're going to see a retracement of a lot of these short-term gains. And that's when I'm going to get interested in starting to take a position, because that's when I might get more confidence. If you see share prices make higher lows, and then that will give me confidence that the trend might be in the process of turning. And that's when I sort of think to myself, like Muzz said, risk reward probability is more on our side, and that's where you can take a position with a bit more confidence.
If I could jump in there, and I've got pretty much a very similar view to Greg on how this plays out, and maybe it takes 6 months or a year, whatever, but it's a very similar view of that this is going to run out of time. It's going to turn back down, and we don't know how far it's going to go down, but this next leg down can be a great opportunity for long-term investment. And my view is to actually ratchet up the quality scale. So I've been trading a lot of mid-cap, small-cap stocks that I think have a great future. But if we have another big leg down, I'll be looking at the Wesfarmers of the world and the companies that are the oligopolies in Australia, because there's a few sectors in Australia where there's 3 or 4 companies that own everything, the whole market, like the banks and the retailers and all of your Woolies of the world, etc. I mean, those businesses are going to be around in 20, 30 years, and they're going to keep dishing out big dividends. And if you can pick them up at 20, 30 year lows, like a Woodside, I mean, if Woodside turns down again and goes to $15 or, and you're buying it at 20, 30 year lows, and the assets that they own are multi-generational, I mean, that's when you start setting yourself up for a retirement, by buying those sort of companies that are going to be around. You're getting them cheap, and in 10 years, what dividend return will you be getting from those companies? And capital growth. So for me, that's what's exciting, is if we get a chance to jump into the top 50 stocks at a really cheap level. I think that will be quite exciting if it does happen.
Well, perhaps that's the next stage of this conversation. Then in a couple of months, if we do see that downturn play out, we can talk about the type of stocks and the sectors that we might be looking at to take those positions in.
Yeah, I think that's good. It's probably a good place to end this conversation too. Just one thing for both of you. If in a very short, snappy 30 seconds, what's the key thing, I guess for a takeaway for people listening, what's the key thing they need to be looking out for then, whether that be the next week or the next couple of weeks? Murray, do you want to go first?
I'm watching it like a hawk for it to turn back down. So I want to see a spike higher. And if the US market does blast off in the next few weeks and rally 200 points, don't buy it. And if it does turn back down, it's an exciting opportunity for short-term traders to capture the next leg down.
There you go. And Greg?
Yeah, for me, that Aussie dollar is just always a good indicator. So I'll be seeing whether that can break through its resistance or whether it turns back down. And then on the back of that, there's a couple of other indicators that I'll be looking at as well. But if that does turn down, that should be matched by other risk assets in the market turning down. And if at the same time, you still see a strong US dollar, you still see bond yields holding at those really, really low levels where they are, it just indicates that the risk off trade is fading, and it's time to step aside.
Cool. All right. Cheers, guys. We'll wrap it up there. Like I say, if you've got any thoughts or comments on this conversation, just shoot me and Greg an email at letters@portphillipinsider.com.au. We've had some awesome emails, and we'll aim to keep answering them as we go. It's been quite a cool little thing to read, hasn't it, Greg? Like over these past few weeks. Yeah,
absolutely. So enjoy reading it. So I'm more than happy to to keep the letters coming, guys.
Cheers. Thank you.
Thank you.
Thanks, guys.